Hi, this is Drew Tignanelli. This is our August update, and markets kind of gave us a little relief in July. A
little bit.
So it seemed to be pulling back as we come into these last few days before the great day there, Mike,
Or the great day, yeah. So the day that we're recording this is July 26th. There's still a couple days left in July to make anything we say potentially wrong. And we are on the heels of your birthday.
July 31st, right? So anyway, we'll get this out to them in the first couple of days of August. And, the bond market has been actually doing reasonably well finally.
Yeah.
Reacting a lot more positively. There's signs that, you could see that inflation cycle that we've been experiencing turn down some. The real $64,000 question is, how far will it turn down? And how long will it stay down? Because you still have lots of inflation pushes into the economy.
Sure. Yeah. Right now, some of the indicators are showing that we're starting to have the cooling off of the economy, which is what the Fed's been working towards. Today, July 26th, the day that we're recording this, is the day that the Fed is meeting and is expected to raise rates another 0.75%. That would take us to about 2.5%. And if we look at treasuries and long-term and short-term rates, you would say as of today, the market's predictive machine is seeing the potential for maybe rates going up as high as 3.5%. So another 1% worth of increases over some period of time. But it then shows them cooling back off. And what we've seen in the past couple of weeks is the 10-year treasury coming down a little bit, which is a good sign for the not near future, but the future in general, wouldn't you say?
Yeah, actually, if I were on the Federal Reserve Board, that I'm not, but if I were, I would be arguing that 2.5% is where you want to stop, because the 30-year treasuries at like 3%, the 10-year treasuries at like 2.7, the 3 years at like 2.9. At 2.5, you've got a flat yield curve. The economy is already slowing down. You don't want to tip this economy into a recession. You just want to cool things off. And at 2.5%, things are cooled off, because when you have a flat yield curve, Mike, when you have short-term rates and long-term rates about the same, banks don't make a lot of money lending a lot of money to anyone. And so what you're going to see is you're going to see a little less lending, and lending slows an economy down.
Yep.
You're already seeing signs of that. So
you've got plenty of voices out there kind of speaking the other, but I agree with you there. So June CPI came in at about 9.1%.
And a lot of that, Mike, the inflation numbers that we're seeing, a lot of that has to do with the fact that we've gone through this period since 2008, when the economy almost came to a crashing halt. I mean, 2008 was our generation's form of the Great Depression. It didn't feel the same as the Great Depression. That's because a lot of policy mistakes were made in the Great Depression that weren't made this time. And but it was a pretty severe cutback in all kinds of things. Many companies went bankrupt. Many builders didn't build houses again for quite a few years. Yeah. Many people were stuck in their house at very high prices that they couldn't begin to sell if they wanted to. And it wasn't until 2020 that you really saw the transformation, that builders had been building houses and people were able to sell their house for more than they paid for it 20 years ago. And that created a loosening in the real estate market for people to migrate to bigger and better houses and so forth. And, but that's just one of many things. The pandemic disrupted the supply chain around the world,
Well, let me stop you there just for a second, because I think you created your own very good transition into a topic you want to discuss. So a lot of people are saying that the real estate market that we're experiencing today is a result of the building stoppage that happened back in 2008. So what's causing housing prices to go up so much today is from something not in the past couple of years that happened, but something that happened 12, 13 years ago, right?
Yeah, absolutely. And also the oil and gas situation that we're experiencing is a portion of the problem happened in 2020 during the pandemic. A lot of people don't realize that in March of 2020, when the economies around the world shut down, you didn't need oil. Do you know what they sold a barrel of oil for in 2020, Mike?
I want to say that somebody had to pay them to take it.
Hey, they paid $10 a barrel for people to take the oil from them. They said, I'll give you $10 and the oil if you take it. You can't even get your head around that, Mike.
Yeah.
And what happened is a lot of the shale oil drillers in America collapsed. And so the oil industry in the United States, which was going great guns and was pumping out tons and tons of oil and growing, all of a sudden, poof, the pandemic and the stupid response of government, in my opinion, is just my opinion, of lockdowns and so forth. Yeah, I understand the purpose, but you should let people make their own choice. Give them the warnings, give them the signs, but don't tell everyone you can't do something, because this is what's causing a lot of what we're experiencing today. The shale oil drillers collapsed, and they're not about to put a bunch of money back into these wells when they just experienced 2 years ago a complete bankruptcy. And they keep hearing government saying that we don't want fossil fuels anyway. What are they going to do? What do you expect them to do?
Right. So, but that's all leading to what you wanted to talk about, is that many of the things that are being heavily pressed on the news today, many of the issues that feel immediate, they are immediate issues, but they're not caused by immediate sources.
Yeah, I am not one to say, I'm a person of truth, and I don't let my political biases impact what I see as truth. I don't like President Biden. I didn't vote for him. I'm not going to vote. I'm not going to. But I'm not going to blame him that he's the sole reason for inflation. He's not the sole reason for the stock market going down. Whoever would have gotten elected in 2020 would be experiencing the same things today, no matter what they say, no matter what they do. It's just an impact of what's been happening in the economy. Could Biden make better decisions? I bet you he could. But would it bring inflation down immediately? No, I don't think it would. You could give all the licenses out and everyone in America and say, pump all the oil you can. But the problem is that they just experienced a wipeout 2 years ago. It's not the first time they've experienced wiped out in the last few years. They're tired of the wipeouts, Mike, and they're starting to say, no, we're going to be more careful and gradual as to how we do things.
And we lost 6 or 7 years of home building from,
6 or 7 at the very least, Mike, maybe even as many as 10, where they weren't building nearly the homes that they had been building pre-2008. See, these forces of economics precede and go before and beyond all politicians. And if I let my political influences decide my investment decisions, I'm just going to make serious mistake after serious mistake. And if you look at the history, Mike, and maybe we should put a graph of this in if we can.
We'll try to find
that Kennedy and Johnson and Jimmy Carter even and Bill Clinton and Obama all had incredible stock markets. Nixon had a terrible stock market. Reagan had a mixed market. Bush Sr. had a bad market. Bush Jr. had a great market, and then it came all the way back down. And Trump had a reasonably good market until it came down during the pandemic. You let political
no straight lines to
influences.
draw.
What's that?
No straight lines to draw is the
point. But it's
the straight lines can be drawn, but not to
It's not because these
party.
guys did a better job than these guys. It's just the way the economic forces, you happen to be in the right or wrong place at the right or wrong time, boom, end of the story.
Yeah. Well, moving on to less debatable topics.
Now, I'm sure we're gonna get lots of debatable.
Sure.
I'm sure I'm gonna get emails from all kinds of people.
So talking about emails and questions, you know what we don't get a lot of questions about on the radio show?
Insurance.
Insurance.
And it's too bad because it's the number one thing we fix for our clients. Insurance.
And a number of people watching this video probably have done the financial physical. But the follow-up, the thing we want to try to impart is, however long ago that was, your life and your situations will have changed. And there's a number of things with insurance that just don't stay perfect forever. They need to be updated and reviewed. And we were talking about home prices a little while ago, and that's certainly one of them. Does your insurance company have the proper value of your home? Whether it's now some of those, like you were saying, Erie, Drew, you were saying, hey, people, if you're getting your insurance rate updates and your insurance is going way up, well, it's because Erie is automatically increasing the value of the homes based on inflation. But not all companies.
Erie's policy is just a blanket guaranteed replacement value. It doesn't matter what your house costs. They just guarantee replacement. They estimate what it'll be. So if they think it's going to be more, then your insurance premium is going to go up, but you never have to worry about it,
But that's one company. With a number of other companies, you do need to make sure that they have the right value. And home appreciation is one thing, but we saw building just this huge spike in the last 2 years. If you built an addition or you made major improvements, those are all things that could affect the value of your home. And it's in your best interest to make sure that they know what that value is.
Absolutely. And it, it's not a simple thing to explain on this video, Mike, but
Right.
Your dwelling coverage on your home is critical to understand. Do you have an HO1 policy, HO3 policy, an HO5 policy? Do you have a dwelling value that's at least 80% of your value of your house, what it could cost to rebuild? I mean, these are all critical things to understand. And with what you're saying, price of building has gone up dramatically as your agent kept up with it. And you have to be careful with that. Bring your policy to us. We'll look it over and give you our opinion.
And I'll stick there on homeowners policies for a little bit and say, do you have insurance for everything you need? A lot of homeowners policies will base the coverage of certain amounts off of certain dollar thresholds. So jewelry, art, firearms, all of those things generally will have a specific value. And if in any of those categories you have a number of things, so your value is above $5,000 or so, or you have, one really special thing. One of the things that you might do if you have one thing that's of a really high value, a particular ring or a painting, is you may have that as a scheduled item on your insurance. And it's important to think about those things. The other side of it is, did you have something like a piece of art that was scheduled on your insurance policy that you're paying an extra premium for, but you've given it to a child, or you've sold it, or whatever else? It's important to keep up on those things.
Or the artwork is worth a good bit of money, but it's not worth that much more than your limits in your policy anyway. Like Erie will go up to as high as $10,000. Same with USAA. But some of them are as low as $2,500. And
right.
And the other thing you have to think about, Mike, is if I lost this piece of jewelry or this piece of artwork, would it be the end of the world to me? Would I be financially devastated? Do I want to replace it? Would I be able to replace it? And is it worth paying the premium to get that money back?
Yeah.
That's not the purpose of insurance, right? Purpose
Right.
of insurance is not to replace every little dollar that we lose in our lifetime. Purpose of insurance is to prevent us from being bankrupt. So let's talk about like domestic workers.
Yeah, so that's another category.
That'll bankrupt you.
Another category is, do you have insurance for everything you need? So domestic worker is one of the ones we see very commonly. Could be a gardener, could be a housekeeper, could be anybody who's coming into your house that you don't have a certificate of insurance that they are separately covered, and you want to make sure your policy has workers' comp coverage. The high end policies do, but some of the other ones won't. So you want to make sure on that. The other thing is, in the state of Maryland, this summer has been a really popular summer for boats. So, what's your boat insurance like if you're going to have a boat? And, when you look at some of the boating accidents that have happened this year, is your liability coverage correct on that boat? Hey, maybe you say, oh, it's a cheap boat, I don't care if it sinks, but you say, oh, wait a minute, if I make a mistake and somebody gets hurt, I want to make sure I'm covered. And then there's, personal example I have of something that's kind of interesting you might not think of is I have a Polaris Ranger, which is like an ATV, but bigger. You sit side by side with people. It's like a golf cart with 4-wheel drive. And I use that to plow snow. And if I'm on my own property all the time, then my homeowner's coverage covers it, without anything additional. But if you're like me and you like to be a good neighbor and plow your neighbor's driveways, as soon as you drive off your property line, you don't have liability coverage anymore, unless you separately get a policy for that vehicle that covers the underlying coverage for your umbrella policy. So it's just always good to have conversations with us, have conversations with your insurance agents on anything like that. The other thing is that some policies that we hold for a long time, like life insurance, you can't go too long without checking in on that life insurance. And I was initially talking about whether you have enough or whether you have too much, but Drew, you made an interesting point.
Well, let's just talk about whether you have enough. Okay, so you're young and you have children, you have a spouse. What do you want for them if something happens to you? Do you have enough? And it's a simple calculation to determine that, and it's not that expensive either, Mike. If you're in relatively good health, you should be able to buy that insurance for less than $1,000 a year, believe it or not. And I'm talking about millions of insurance.
And we're talking about life changes. I heard of a situation recently where somebody had second or third child, and that child had special needs. And now all of a sudden, the amount that it would take to, take care of the family would be a lot more. So it is important to really consider what, like you said, the purpose of insurance is to make sure we don't go bankrupt. What would my family and what do I need?
And then the older policies, we've got a lot of clients who are in their 60s and they've had policies since who knows when, and they've been paying it, and they've always assumed that this policy is going to pay off when I die, regardless when it is, Mike. They don't, they're just because when I was younger, that's the way insurance was assumed. It was always for your life. But what happened is when I became about 20 years of age, new morph policies started to come out. And a lot of the policies you see today have nothing to do with whole life. They have something to do with what the insurance company says they're going to charge you for this and pay you for this. And if this happens, then you're going to get this. And if not, you're not going to get this, et cetera, et cetera. And when you get to be about 60 or 70 years old, you need to be analyzing those policies to see, is this still a policy that's going to pay off after when I pass away, even if I live to be 95? Because you may have paid on that policy for 60 years. And then all of a sudden you pass away, and they say, well, there's no insurance left, because it ended 2 years before you passed away. And you're like, how could that happen? We just had that with a client.
Well, you're not like that, but your family is.
That's true. We just had this with a client, $400,000 policy they had been paying on for years. Client was 99, and the insurance company said, policy's over, no more insurance. And no matter how hard they fought with the company and the insurance commissioner, at this point in time, they're saying
the contract said
this, and sorry, the policy's over. Yeah. And he passed away about a year or two after they canceled the policy at like 99. But that's just how it was designed.
Well, so our kind of closing thoughts on this is, one, talk to your advisor about your insurance, bring it up at your financial review meetings, or you know,
All your insurances.
all your insurances. And then along with that, not every year, but every few years, it might be good to get another quote from a different carrier. And lastly, when you're getting those quotes, depending on which types of company you're using, there's, sometimes discounts that the agent isn't overtly concerned with whether or not you qualify for. So you need to kind of ask them about that, whether it be an affinity program because you're a member of a certain association or something of that nature, or even just something that maybe you've done, like Simply Safe has been very popular lately because it's an inexpensive alarm system you can do yourself. Well, most insurance companies will give you a discount for that, but they won't give it to you unless you ask. So
Yeah. So one thing you mentioned about getting a quote every so many years, a lot of people are under the misnomer, Mike, that if you keep insurance with the same company and the same agent for years and years and years, they're going to take care of you better. Nothing could be further from the truth. You're just a number. You're a number to those big insurance companies. And if you paid your premium and it meets their standards, they'll pay it. And if not, they're going to fight you over it,
yeah.
And they're going to cancel you if you have a couple situations that line up to say, cancel, this person's violated these two things. I don't care if they've been with us for 40 years. That's just the way the game is played. So don't think that if you've been with somebody too long or a real long time, they're going to take care of you. And you're looking at me like, Drew, we're finished. We've gone way too long. Right?
I thought it was great. Great content.
All right, Mike, this is Drew Tignanelli saying God bless.